Good morning, good afternoon, good evening, traders around the world. This is Phil V at Trading Capital Markets. We are currently the 15th of May and it's 9:28 a.m. Let's get into it. So over here we had the news. These are the news candles, 8:30 right here. A lot of positive news for the United States. And now we're trading the aftermath of that news and the Powell speech that was at 8:40. Nothing for the rest of the day on the economic calendar. So we're going to be moving solely off of price action. 9:30 candle, just opened. Dow's going up while the rest of the market's going down. Relative equal lows over here and here too. Let's see. 7 o'clock is here. Let's delineate the 7 o'clock mark. Right here. High was taken, low wasn't taken. Kind of similar to yesterday's, but this high was taken at the economic indicators drop. Let's see. Good morning, Roger. Yeah, very nice. You guys are getting all the nice movement in the London sessions. Now we swap to New York being shitty price action and London session being the good times. Sometimes it's London that's shitty price action, sometimes it's New York. Yeah, I think so too. We'll see. So here's your first presented fair value gap. Okay, so we took these highs over here. Didn't close above. I really don't like this price action though in this AM session. I don't know. Three equal highs up top over here. Broken. Let's see what the market offers. Did you do any nice trades on the London session, Roger? Nice. You still caught something, which is great. Yeah, the confidence is going to come to catch long moves. We're bouncing off of the first presented fair value gap over here. Let's see if we could close above it. So, relatively the same thing as yesterday. We took the highs on the left, turned around. Let's see. Looks a lot like yesterday. Let's see. Come take these relative equal lows over here. Order block over here. Let's see. Good morning, Bino. Or good afternoon for you all in Europe. Okay. Let's see. Does it take these equal lows, stop at the consequent encroachment of the order block, and then lift off from there? Or let's see if we have a bigger, uh, nothing on the 15-minute. All the wicks have been filling these fair value gaps. Let's see on the 5-minute. 5-minute, there's this big one. And there's still like one down here. Four minutes to the 15-minute candle. We just took the relative equal lows right here and bounced off this order block. Okay, so we're gonna use this as a balanced price range over here. Took this liquidity. Let's see if we could close above over here on this candle. Nope, we could not, which is interesting. Have this. Didn't get to the consequent encroachment of that discount wick, and now we're making our way back up. That's impressive. As I said in this morning, I didn't like the price action pre-open, and I'm not liking the price action right now for the moment. Over here, little volume imbalance. Let's remain patient. So now we close above. Possibly use this as an inversion. We are still in yesterday's trade. Yeah, it feels the same a bit. Rebalanced right away. Another volume imbalance over here. Touch the volume imbalance and left. Yeah, that's why I put on my community post that this is not nice price action for the moment. They couldn't reach the consequent encroachment. Let's see, it's gonna, if it, oh, now it just destroyed it. Straight through the order block. And now coming for this sell side. There was no opportunity for me to get in, nowhere over here at all. Let's take a screenshot of this scenario over here. A screenshot of this scenario. I want to save it for my studies, for the notes. So that's going to be for the notes. Okay, so first presented fair value gaps are in purple, volume imbalances are in blue, inversions are in yellow, order blocks are in green, and just regular fair value gaps are in gray. And this would be a 5-minute fair value gap. Now we are in the 1-minute time frame. We're probably going to come for a sweep of these lows right now. And I want to see how it reacts below these lows. If it's just going to be a sweep and we're going to continue above, or we're going to come and take these relative equal lows a little bit further down. Because on the, let's say 5-minute, it was a real take, and on the 15 minutes, probably a sweep. Sweep of the highs. Sweep of the highs with 1 minute left of the 5-minute candle. There you go. It's coming back down. All right. There was no entry point at all in this right now because now we have the clear break of this leg. We have the clear break in market structure, but let's do a little. Right here, and this was the clear break of this leg. And this was a clear break of this whole leg. So let's put it over here. We did not have a retracement back into this fair value gap. It's going to be a normal fair value gap. And this right now is a breaker. It's no longer an order block. It's now a breaker because it was the last down candle before taking these highs right here. And we shift in market structure, going lower than this leg. Yeah, exactly. Oh, I don't know why it keeps on freezing the camera. Anyways, I'm gonna buy a webcam soon enough, because now I'm streaming with my my Galaxy smartphone with phone link. It's a temporary setup. But don't worry, guys, you're not missing anything. I'm not that pretty. All right, so this is the breaker. Technically, an entry would be at the beginning of this fair value gap, and we'd have a continuation down. So let's go get these relative equal lows over here. It's having a hard time passing the consequent encroachment of this breaker. Ah, shit, just missed it. Just missed it. Ah, man. All right, so I'm in. Let's see. Stops going to be above these highs already. Wow. And the buy limit should be below this. Let's see. Using the first presented fair value gap as resistance. Let's see how this closes. I'd like a close below the consequent encroachment of this fair value gap right here. Let's see. Opening price of this candle opened just a little bit lower of the closing price of the previous one. Very similar to yesterday. Extremely similar to yesterday. The only thing is that it left some really close relative equal lows over here. And those are the targets for this morning. The breakup of these highs will invalidate. So come on, you can do it. And for whoever's watching, this price is the profit percentage and loss percentage is delayed because have interactive. I don't have an active interactive brokers feed, but I do have it on TradingView, so that's the discrepancy. The way this moves is unbelievable. So tricky sometimes, and sometimes so simple. Like, look, I'm pretty sure this is gonna do the full range of this candle, of this wick. Right here, you think you're bullish. 30 seconds later, you're bearish. It's unbelievable. And it does it with a degree of precision, like stopped right at the top of this fair value gap. And now we might be back on our way, and now it might go all the way back up. But based on market structure, I think it's gonna go back down. And there you go, all the way back up. It's too funny. Nasdaq must be a woman. Ah, too good. Oh my god. Oh my god. He's speaking in code, Bino. We're gonna have one straight candle all the way up. I feel it. I can feel it. There you go. That's what I was saying. Oh, right to that. Right to this volume imbalance and fair value gap. With precision. With incredible precision. Woo! And that's crazy. No, no, no. Now we're gonna take it. Yeah, exactly. If you close above this volume imbalance. It's okay. I felt it. I knew it was gonna be like a straight candle up. Well, let's see. That's crazy. Again. All right. Well, second day in a row that I'm wrong, or third, I must say. We're out. Hmm. What does it look like on the 5 minute? 2 minutes 30 left. This is disgusting. 15 minute. Yeah, exactly. That's what I was thinking about. But at the same time, what is this? Oh my God. Let's see what we got going on over here. Uh, not touching the breaker. For me personally, it's at the bottom of the breaker. It has to respond very fast. But if for your setup you like, what the heck just happened? MNQ, MNQ. There we are. Oh, so close. Yeah, it's responding. Look, responded pretty quick when it touched it. So, you're following what you learned from me. Yeah, I like it to go at the bottom of the breaker, take the low of the breaker, and leave quickly from there. Okay, so let's see. Nothing's closing below this volume imbalance, which is paired with a fair value gap. All the bodies are closing above. Let's see. All right, first position in. Touch the fair value gap, the first presented fair value gap. Let's see if it's going to get to the bottom of this breaker. We shall see. And yeah, it's going to get to the bottom of that breaker. Did not get to the bottom of it, which is fine. It's getting bought up. I want it to close at approximately the consequent encroachment. Second, bottom of the breaker. It just, let's see, it just got touched. Top of this inversion, straight through. Oh my lord. Oh, oh. All right. Okay, so today is not the day again. That's fine. What the hell is this price action? No, but at least it's small moves. It's not big range moves like the previous weeks. Like this was what 16, 16, 16 points. It's like 20 points, 26 points. It's not that bad. It's not that bad, but it's not all great. Look, it's like getting crazy for real. Taking the liquidity on the low, taking the high, after that taking the low, after that taking the high, after that coming and attacking the low again. It's a bit challenging these days. Last month was fairly straightforward. This month is a bit more difficult. And you see this? Took the lows. This is unbelievable. Took the lows, closed above. Now we want to see if we close within. Let's take off the executions like that we could see. This fair value gap to come and get these relative equal lows. My face right now, I know you guys can't see it, but it's perplexed. It's trying to understand what the heck is going on right here. Let's see. Let's get on the 15-minute. Like, look at these sessions. This is New York. Nonsense. London, beautiful. New York, again, nonsense. Let's go check. Let's go check. Let's go back and check a little bit. We have a third person watching the stream, but I don't know who it is. Reveal yourself. Great. Great, great, great. We're stuck right in the middle. It's just not nice. Let's see. Yeah, we're stuck exactly right in the middle of the range. Nasdaq is the third expector It's Nasdaq is the third spectator. Yeah. Oh man. Okay, so it ain't the 15. It ain't. Oh my God. Well, I didn't look at the 1 hour. Now I know. It's clearly the 1 hour. No, but these relatively close lows were taken, but the market broke structure on the 1 hour. Probably gonna finish lower over here. So yeah, lower it is. Yeah, yeah, exactly like yesterday. Yesterday's mess. There you go. This was the open. Higher highs and lower lows. But then past, let's see, past 12, then it started to become clear. Well, even then it's not really that clear. Okay, so here let's say that, nah, this is disgusting. Now a short could be interesting. Yeah, yeah. Now a short could be interesting. But let's try and see why a short would not be interesting. So a short would not be interesting. Let's see. Let's go back on the 5 minute. That's why it's not interesting just yet. Because from this leg to this leg, we created a new high, right? But the bodies didn't close below this low. They did not close below this low. Yeah, exactly. But this high did not close above this. The bodies of this high did not close above this candle. So it's like, Okay, so we're at the top of this 1 hour fair value gap. I think it's the 1 hour. Yeah, so we just came back down. Top of that 1 hour. But you see where it stopped? Probably at the consequent encroachment of this order block. Let's see. Exactly at the consequent encroachment of that hourly order block. Uh, Sometimes the bigger time frames win. We left relative equal lows on the bottom side over here. Let's see. Do, 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 do. Here, balance price range, bounced off the first percent fair value gap. Touching back into this order block above that 1 hour fair value gap. Let's see. Bino, did you catch anything? A smelly trout. So I guess you caught nothing. Okay, there's your short, Roger. Yeah. Good idea. Good idea, Roger. And right when it takes those relatively close, are you going to bring your stop loss break even? Yeah, that'd be the great idea. This is not cool. Relative equal lows have been taken. These first little ones over here. And now these ones left down here. So close. Yeah, but it's fine. Imagine it wouldn't have went your way. It's important. It was more for me personally. It was more of a gamble than anything. If I would have taken this short, because I had no idea what the hell was going on this morning. After the second trade, completely invalidated everything. So it's important to know when to stop and just look, sit on your hands. Yeah, I don't want to gamble. I'm not gambling. I have to know why I'm wrong and know why I'm right. Because imagine you're right, but you don't even know why. That's even worse than being wrong for your mental, for your psychology. Yeah, yeah. Yeah, we need to make a new low. There she goes. I think I might trade the afternoon session today. All right, so we took those lows. Now we're gonna come back and take these highs. Let's see. Yeah, it's sometimes it's very. Come on, do one move correctly at least. Yep. I think I'm gonna trade the PM session today. There she goes. Okay, let's analyze a little bit while we're on stream. So we had the 7 a.m. Starting time, which was what? Right here. High was taken, low isn't taken again. Right. Right. High was taken, then low wasn't taken. So high taken over here, then the low wasn't taken over here. Then the high was taken over here, then the low wasn't taken over here until now. Let's see. So from here, from here, from here, we take this high on the left. That was here. Then we come back down. We're not able to take this legs low. Then we come back up. And make this high. Then we come back down. Not able to take this legs low. Now we're going to come back up all the way over here. Yeah. There's those candles. So that's my analysis. We took the liquidity high. Not able to take the sell side low at the open. After that, we took the liquidity high again. We could even put it now let's do another analysis. Let's run through the options. So we went above over here, right? Went below. And then we started. This it doesn't count. So this could be this. Whatever. This doesn't count because it didn't close above. So we don't count this retracement as a leg. Because bodies didn't close above this top. After that, there. Down to down here. Then we had this candle that closed above this high over here on the left. So we take this. After that, we have here that was broken. So from this high to this low. And then we had this high, but look over here. This high, but the top did not pass these highs over here. The bodies. So we're still within this leg. See, these bodies pierced but didn't break above. If I move this and move this, did not break above and close. So technically we're still in this leg. So now let's analyze the price action within this leg. Came back, couldn't pass. After that, could not pass over here. Bodies closing above these wicks and even the bodies in this case. Failed to create new highs, create new lows. So if you'd be short, this would be your stop loss right over here. I hope PM is clearer than AM because this is not my type of price action. Some people love this. I mean, but it's not my type of price action. Yeah, but you know, this is the thing that it gets me frustrated because. So let me explain. The PM. Do you guys hear the dog in the background? All right, just close the window. So yeah, the thing is that in the PM, let's see. In the PM and London session, right? I think it did it 2 days back to back. Let's go back on the hourly chart. Hourly chart. Should I go hourly chart? Let's go on the 15-minute chart. 15-minute chart and take off all the drawings. Hide drawings. Perfect. So 15-minute chart. Usually when there's like a how do you say? Not a yeah, a liquidity sweep and a like an extension in Asia and London. Usually it's distribution during New York, and I should have known. So And we're also at the top. We're really at the top of this long um, bullish trend, and we might be seeking a reversal. So people that were short distributed their shorts over here, and now they might be getting short again over here. And this is probably those highs are probably at a weekly fair value gap. Let's go see. Commodities, no. Not this. Let's see. Yeah, exactly. Did it go all the way back up? Oh man. It did go all the way back up. So yeah, this is not the type of price action you want to trade. There's no move. There's no move. Well, me personally, it's just not very appealing. Hmm. Let's change the settings. Canvas symbol. Yeah, so that's why the stop loss should have been here on this leg, but it doesn't matter. You protected yourself, which is good. Ay, ay, ay. Look at this. Perfect London move. Might even trade the London move. London 2 a.m. to 5. That's 2 a.m. to 5. Must have been here. 2. This is it. 2 a.m. to 5. Okay, let's see what the London move had to offer. If I was looking in retrospect. Let's do a little bit of price action. Alright, so here, 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 there. After that, we broke over here. We broke over here. Wow, beautiful. Look at that. So that would have been a trade probably right here. Look at this. Right here. Not there. Nope. Here to here. Fair value gap. Bodies closed in. Wicks did the damage. So we had the change in market structure that occurred below here. Very clean. This is clean price action. This is very clean price action. Came back over here, lower. Look, didn't pass these highs, which respected the bearish momentum. And let's say you have your stop losses right above over here. So put a short over here, stop loss here. Take profit below these relative equal lows. You see these right here on the left side? Bada boom. You put the take profit over here. And it was hit. It was hit. It was hit. Now let's see in how much time it was hit. So that trade took 33 minutes exactly. No, what am I saying? Yeah, 33 minutes to come and get these lows. And that's a 1 point, and that's exactly my ratio that I trade, 1.46. Oh yeah, ICT traded it. Yeah, yeah. This is exactly what I would have done. This is beautiful. Like this is price action. And then you go to New York and you get this. Not nice. You are learning with me? Like you mean that you're learning from me, like I'm teaching you things? Ah, awesome. Let's go. Let's go, Roger. You're gonna be the millionaire down there trading the dream. Yeah, so that was really nice. Okay. So now let's evaluate. Let's evaluate. Let's evaluate. So we had broken this low and now we're continuing market structure. Okay, so let's see what's the second trade we could have done in London. I already spotted it. Have you guys spotted it? Gonna give you guys this would have been my entry right here. You ready? Okay, so after breaking below this low, you would have tapped into this fair value gap right here. Stops would have been above this wick, or you could have said above these highs. But if you want to play it tight above this wick or this one, and then you enter short and you have a, so let's say above this high would have been your stop loss. You enter short over here, got this, and what's your target? Let's see the targets. Targets would have been these relative equal lows. So it would have been those relative equal lows right here. Oops, sorry. Right there. And look at that. To the tick before bouncing. So yeah. Very nice setup for London. And that's 38 points. It's not big moves, but it's clean moves, which is nice. Nice to have. It's better than all this chopping this morning. So you would have had 20 plus 40, 60 points. 60 points total, which is amazing. 60 points total out of how many points? Let's see. 60 points total out of a price range of 176. So let's say 33% of the move. You would have caught 33% of today's move. Good job, Roger. Made the same trade. I went to go see the picture you sent. Oh, there you go. Very nice. Good job. And was that on the funded account? Still great trades. Still better than no trade. If you caught only half the move, it's good. Okay, so yeah, I understand. For now, it's difficult. Oh, there goes the Nasdaq. We got one direction. That was a hard morning, that's for sure. Yeah, it did. It broke this one. Every market is running higher right now. The Nasdaq, the S&P, and the Dow, which is a good sign for this trade. I don't know how I feel about this though. Let's see. I just took a London high. Probably gonna go for Asia high and these relative equal highs up here for the rest of the session. That's not a pretty color. Mm, that's nice. The fact that it created a fair value gap at a high in one direction is nice. How many points? That'd be what? 30 plus 20, 50 points. You see, so this is the tricky part about these stop losses, right? They're typically quite large because it's a range. So if it dips back into the range, it could go 50% of the range and then come back out. Oof. Let's see. I think I would put it like right below the consequent encroachment of this inversion to right here, 303. It's still a lot of points, that's the thing. Because you could come back down, get this breaker, come to here, right? Use this breaker as a bounce. But now you see what it did. So let's analyze here what it did. We have two back-to-back fair value gaps. Okay, and now it's going to start ripping. Two back-to-back fair value gaps with bodies respecting this. You could have taken the first one, and your stop loss would have been four 4 points below. Well, you could even put it here. Your stop loss would have been right here. And it's nice that this created a lower low than this candle. And then this one gapped up right here. At that gap up could have been your entry. But now we have a look what it's doing. It's creating another fair value gap to the upside. Right here, right now. Boom. This could be your second entry. You could enter right here. This with two back-to-back volume imbalances. 1, 2. So there you go. It entered right on it. And now it's going to run. So you see here you have double confirmation. Fair value gap to the highs, and after that you have another fair value gap in the direction of the highs, which would create a balanced price range. $13-point stop loss. But yeah, but with the style that it's doing today, it could possibly wick below this, but no candles close below this and continue higher, right? So that's what you have to be careful of. And that's why my stop loss would be 4 ticks below this the consequent encroachment. So at 42. And it's close to my ratio. The 1.66 is just above my ratio that I'm used to taking. And we're creating some nice price action above these highs. Let's see. Let's go see the 15-minute candle. Yeah. That's disgusting. There it goes. Did you take that one on your funded? Or you're just watching for now? No, okay. Yeah, it is normal that New York moves like that when London has big moves. Here. So you see from here, even pre-market sometimes. So you see, look, watch this. It inverses. So from here to here, look, from here to here was London, okay? 2 to 5. It has the same type of price action New York is having. Right when New York kicked in, look at that huge trend it created with big moves, like huge moves, 250 points. And then it continued for the rest of the session. Look, another 300 points. So when London does this consolidation, New York expands, right? Because consolidation at the end of a retracement usually is going to be expansion. And plus there was these relative equal highs that need to be taken. Hmm. So yeah, it's quite common. Okay. Let me show you the difference. And you'll see why it just jumped there, where it jumped. Oops, Pepe. NQ. NQ. Let's go in a minute. Let's change this. Canvas, this, like that we have. Good. Take off the volume. Here's the difference. Over here, this is the normal NQ contract. We have this volume imbalance, and on the left side, we don't have this volume imbalance over here. So that's why it bounced right here. So you wouldn't know why it bounced right here on this chart, but you do know on the NQ. So that's why it's important having them side by side. But I have 6 screens, so I have it on the screens on the right side. Yeah, six screens but two eyes. It's so perfect when I think about it. It's so perfect living in Europe and trading because let's say you work in the day, right? Look at this. We're gonna go hit the take profits. So you work in the day, you come back, and then you could trade after a full day of work. Yeah, exactly. We lose the London session. And to look at that, take profit, hit everyone. So that completes the morning session. Ay ay ay. And now the afternoon session isn't really worth it. What a morning session though. 38 100-point swings. Absolutely absurd. 44 points. So that was a nice take profit. Amazing. You see, that was the trade. That was the trade. But by the time the trade comes, you already did two trades and you don't want to take the trade because like this is the psychology. You already took two trades, so you don't want to take this trade just in case it goes bad, right? Yeah, proper placement of the take profit right here at these highs, 50 points. Yeah, some nice movement post this, getting caught in this range type of thing. It was not my vibe, really. Let's say you were trading with trend lines. Let's say you were trading with trend lines. It would have helped out a little bit. Over here, first, over here, the fair value gap coming out of that trend line. And then extended from there. but not very nice to be honest. There you go. Selling off. Perfect. Take profit. We are in it right now. It's actually not there, the real one, but it's okay. We'll use it as this one. The real one is that right here. And now what? Are we going to use this as a, we took those highs, use this as an inversion, continue lower because we just broke structure. Let's see. Inversion hit. Candle closed below the consequent encroachment of this fair value gap. And now price might continue to drive above these highs. Yeah, trading this is, well, trading this morning was gambling. Then this was clear price action right when it broke out over here because it was a fair value gap in the direction of the break, which is fantastic. But let's say if it would have broken structure over here and you're like, oh my god, this is a short now. Well, no, that's not the case. Right here. Oops, wrong one. Okay, so now check this out. Now we do this here to here. OTE extension is over here. Four to one. 4 to 1 if it comes back over here. And in. But now Let's see. The only reason why it could be invalidated is that it didn't get to break above that point, right? And it created a new low with bodies closing below. But this right here is a balanced price range. 13-point stop loss. Imagine a PM session that we came just to take these highs, and then we short the rest of the evening to come get these relative equal lows over here. Because we are quite high. Okay, so look at this. Balanced price range after balanced price range. We're stuck between, well, now we're under. Yeah, exactly. Ciao, Roger. See you later. Or see you tomorrow. Have a great day.